Hey everyone, it's good to be back. It's been a busy couple weeks, but we're back at it. And I've got a new and hopefully interesting topic for you today. Today we're going to talk about the top three investor biases and how to avoid them. So, what is an investor bias in the first place? You've probably heard of some of these. I think you will recognize some of them when we get to them. But it's really something that we rely on either consciously or unconsciously that helps us make decisions. And that's sometimes can be problematic. So let's dive into them. I think you'll get a sense of what these are and how to avoid them. I'm going to give you specific strategies how to mitigate them. And this is going to lead to better outcomes to your investing performance and your overall financial plan. So let's take a look at number one, confirmation bias. Classic one. I'm sure you've heard of this. So this is when we have that tendency to search for and favor information that confirms what we already believe. In personal finance, we might do this like we're looking for a particular investment. We're looking at a fund or a stock, and we like it. For whatever reasons, we like it. We tend to ignore the bad years and focus on the good years, and that helps us make the decision. So is that correct? Is that good? Um, Maybe not. We might it might lead us to make an incorrect or at least less informed decision, and we might miss opportunities. There may be something else that's just as risky or less risky and better performance. So it also makes us overconfident in our abilities to predict outcomes, and we know that's probably bad. I'll give you a classic example of that. Let's go in the Wayback Machine to 2008 and the housing bubble. Um, we know what happened. Investors ignored the problem with lending and the lending standards, and they just piled into real estate and risky loans like there was no tomorrow, seeking gains, and we know the rest of the story. So how do we mitigate confirmation bias in our finance decisions? So number one, let's train our brain to call a timeout. When we're looking at information, we have to stop and ask ourselves the question, hey, is this already self-affirming to what I already believe? Is this just feeding something that I already know? If it is, then you have to stop and go, well, let's seek out some alternatives. Let's talk to somebody like your advisor, get their view of it. They might give you something very different, or they may confirm what you have already know. So at least it's worth asking. So what's number two? Number two is anchoring. Now, this bias, the definition of it is our tendency to rely on that first piece of information we get. Um, a good example is like we buy a stock at a certain price. We've done our research, we bought it at a certain price. Uh, the problem is this information may be outdated. So a good example is that stock drops in value after we bought it. It's been down for a long time. It's not going back up. So what's going on? We're still holding on to that original price in our head as the value of that stock. We're hoping it's going to go back up, but it's been a year and it hasn't. What do we do? In reality, we know that the market's already priced this for us. So we have to learn to accept that and then make a decision based on what's currently available for information on that holding. So as you can tell, that's this bias, anchoring bias, leads to distortions in our perception of what value is. We tend to hang on to positions longer than we should. Um, let's stick with our real estate example. So when prices peaked in 2004, 2005, up to '08, owners and investors they anchored on the price that they paid for properties. When the market dropped out, they kind of just held them with sometimes disadvantaged mortgages, and they either went bankrupt or had to sell at a lower price just to get out of it. If they were very lucky, they were able to hold on to it and let it recover over. It took a long time. So That's a good example of anchoring bias. Uh, how do we mitigate anchoring bias? I think for us in investing, I like to create an investor policy statement with every client. This way, you know, instructions to ourselves or the advisor are clear, they're actionable, the ground rules are set, and it helps both of us stick to the investing strategy. So that's my solution for that one. Um, Number three is overconfidence. So definition of this is our tendency to believe we're smarter than we are. Um, Never done that. So we tend to overestimate our abilities and knowledge. So I think humility is the word of the day, right? Hey, this thing worked before. I'll just do the same thing again, right? Um, Examples abound. Timing the market. I can beat the market. I take on too much risk, but it's okay. Over trading, you know, and that usually leads to poor performance. So overall, overconfident traders earn lower returns. There's reams of data that show that to be true. Usually, the guy or gal that sticks with their strategy over the long term and kind of sets it and forgets it, they end up a lot better. A classic example for this bias creeping up is the dot-com boom. So we're going back 25 years, 26 years. During this run up in the stock market, everyone was a genius investor until they weren't. Enough said. So how do we mitigate this one? We need a clear investing strategy and stick to it. You know, have clear rules in place for trading. Said investor policy statement earlier. Be unemotional about it. You know, just execute according to your rules. And if you need help doing that, you know, that's where advisors step in. They can be less emotional about your account and the investing strategy because that's what they do for a living. But again, you know, that's the best way to mitigate this bias of overconfidence. All right, so that's it. And you know, there's actually dozens more of these biases that we see in investing. If you need help or advice looking at those, let me know. Be glad to do that. It's just one of the many things we do here, including comprehensive financial planning, biblically responsible investing, tax planning. We do custom portfolios for everyone, so no cookie cutters here. And all the rest of the menu of items you might see here on your screen. So give us a call. Have a great rest of your day or evening, and we'll talk to you again soon. God bless everyone.